Everybody, Dave here, Hidden Freedom Investing, and we have another video on my dividend portfolio update for the month of June. Can't believe another month has gone by, but it has, and we're gonna dig into the portfolio, look at, there's so much stuff that's going on over the month that it's really tough to keep up with what to even put in this video. So I actually created an agenda for this video because I don't want to leave anything out, plus put a little bit of structure there. Maybe I can get them out a little quicker than 20 minutes. So let's go ahead and dig in. So we are looking at the agenda here. Shout out to Investing Sensei, since he does the agendas and all that, and I figured I'd do one. So we're gonna just do an overview real quick. We'll go ahead and look at an event that happened I talked about in my last video, and that there could be an event possibly happening. So that did happen, and we'll talk about that. So number 3, we'll look at the dividend mountain, and like I said in the last video, we're going to climb that dividend mountain to the $1 million portfolio for dividends anyway. So let's see here, dividend portfolio, dividend increases, buys and sells, stock spot for June, stock allocation. We'll look at the dividends received for June. This is my biggest month that I have received dividends for to date, or I guess in the history of my life at this point. Let's see here, dividend metrics, options income, which I may be doing a separate video on that. Just depends on how long it takes. We're gonna kind of just go through the options income here pretty quickly, but maybe we'll break that out to a separate video at some point down the road. So dividend income projections for July as well. So let's go ahead and take a look and talk about the overview and the event that happened. So all right, so we are looking at the dividend portfolio overview. This is a new screen that I created recently, and it was really just because the current portfolio tab here, which you've all seen in my previous updates anyway, has all my stocks there for the dividend portfolio, and it's spread across 2 different accounts, and then I have a combined there. It was very hard to keep track of what was going on without having to scroll all over the place and all that. So what I did is I created this overview page here, and that has both accounts, taxable, non-taxable there, and the value for each account, the income that I get from each account, the monthly income, the annual income, monthly income, and I even broke it down to the daily income. Ideally, I would like to get that to $100 a day and pretty much live anywhere $100 a day. So that's the daily change percentage and dollar amount for both accounts combined, and then that's also the unrealized percentage and dollar gain, and that's come down quite a bit from the last month. But let's see here, account weighted dividend yield, so that's each account broken down, and then combined account yield on cost for each account, and then each account combined, and then the average weighted 5-year dividend CAGR, which has come down quite a bit. Actually, it's come down about 0.10%, and I'll tell you why that happened. So average weighted beta still looking good at less than 0.1, so, or excuse me, 1. Average beta is 0.86 or 0.81, excuse me, and the weighted is 0.77, so that's pretty good. That's very defensive in my opinion. Number of positions, still 39 positions here, and because each position is in each account, that's the reason that's just 39. And then there's the number of shares per account. So there's a top 10 there. I created that recently just to let me know what my top 10 holdings are in my dividend portfolio, and Johnson & Johnson. I don't think they renamed themselves. So Johnson & Johnson, 4.84%. Microsoft there at 4.53%, and Apple is 4.25%. So I think actually there's 11 there, but it just didn't look right if I had top 11. So I put it as top 10. Portfolio goals. Okay, so let's talk about that in here, because the last video I talked about I wanted to get these 2 accounts combined to be $1 million. And I was gonna, I gave you a roadmap of how that was gonna happen. And I talked about that there was gonna be an event happening, and that event happened. So what was that event? That event was one of my real estate notes paid back. Okay, so it was a 5-year note and had a balloon payment at the end of 5 years. There's a 3-year interest guarantee, and for some reason they decided to sell the house and pay back early. Not only did they pay back early, they paid back a year early on the prepayment, so on the prepayment penalty. So they had 3 years of prepayment penalty or interest guarantee. Well, guess what? They only had the loan for 2 years, and they paid me over $4,000 just to be able to sell the house and, you know, to close and get out of the house. So I got basically a whole year's of interest, all right, for all of 2020 through part of 2021, over $4,000 interest, basically a year early. So that's a win-win for me. Paid off, I got all the interest for the next year, and I get to invest that money however I want now. So that's a pretty good deal. So that was over about $70,000 they paid me, and I put aside about $2,500 for taxes because that $4,000 of interest is taxable. So but that's why I have an account free cash here of $55,000. Well, I invested quite a bit of money in the month of June, but we'll look at that here in a minute. So I do have $55,000 that I need to get invested, and we'll probably split that up over the next 3 to 4 months or so. So the portfolio goals, so that's a big jump from the last update of what, $186,000 or something like that. That's because of that $60-something thousand I threw into the account. So that's the reason why we have a combined total now of over $270,000. So there's our account goal, $1 million. Remaining to goal, $729,000. And the percent to goal is about 27%. So I just threw the major market indices there just to keep track of them on one nice good page here. I'm pretty much looking at the stock market every day, but it's nice to just go in here while I'm looking at my dividend portfolio and to see whether or not we're up. And I threw the VIX in there as well, just to let me know what people are afraid of and all that. So you know, obviously this beer virus and stuff can cause some people to freak out, and then the VIX spikes. So sector heat map, that is not what you would think it is. It's not the sector heat map based on the sector of the S&P 500 or anything like that. That is based on my stocks only. So, and then that's just a Google gradient there applied to all of them. So you know, I mean, obviously if energy is up in the S&P 500, but like say CVX and ExxonMobil are down in my portfolio, then this is going to be red. Okay, so this is based on my stocks only. I went ahead and threw a stock heat map here, and you know, that's based on the percentages of increase or decline for that day, and then threw a gradient on there, and that's weighted obviously. So if everything was actually green that day, you could still have some red stuff in here because that's based on a gradient graph in Google Sheets. So it means that, let's just say everything was 0 to 10% that particular day. The 0% stock that basically was flat on the day would be red. So down at the bottom here, I went ahead and threw the estimated dividend growth over 25 years because you know, 25 years will get me to about what, 70 years old, and you know, who knows, maybe I'll get this $607,000 of income. Probably not, because I want to retire by 2021, 2022. And you know, I'm not going to be able to let it grow that much. Obviously it'll still grow. I mean, it's still going to double here in about what, 10 years, but so 19,000 times 2, you know, it's about 18,000. So yes, it's about 10 years it'll grow, even with using those dividends. So, and I like to play around with those numbers just by changing the numbers up here. Let's just say we had $14,000 of income, and you know, that was like 300,000 or something like that. And you just see the numbers just go way up and inflate big time. So it's just fun to kind of do that, you know, before you go to sleep and reminisce. And is it reminisce? No, it's not reminisce. Daydream. So let's clear that out of there. All right. And then there's the total dividends. If you add all those dividends combined for each one of the dividend growth with dividends, without dividends, you basically get $2.8 million in 25 years. if I had reinvested all the dividends. And then the dividends without reinvestment, about $611,000 of a dividend income. So, and just for craps and giggles, I went ahead and threw about a 10-year yield on cost in there, right in between these 10 years. And at the very end of the 25 years, the yield on cost would be about 24%. So, and that's based on the starting yield up here of 3.65%, and the dividend CAGR is 7.93%. So that's dropped a little bit. So there's my social media if you want to get a hold of me for some reason. So, you know, I don't have any problem. You can shoot me a DM, you can shoot me an email, you can shoot me a comment below. That's fine as well. So if you want to see the hiker reach the top of Dividend Mountain, go ahead and like and subscribe and hit that bell notification. All right, so let's go ahead and look at the portfolio here, and some things have changed in here. You know, it used to be Altria was the smallest. Now it's Goldman Sachs, Shackles, whatever. Goldman Sachs is the smallest in there now, and that's because I sold quite a bit of Goldman Sachs. So, and there's the Goldman Sachs sells. I sold some on 626 and I sold some on 630. Rendered some profit. I was up over 18% on that particular stock, and I rendered some profits out of Goldman Sachs just because I wanted to reduce the financials a little bit. They're being a little, you know, iffy right now, including Wells Fargo and JP Morgan, which I'm also in as well. So I went and just took some profits off, and then went ahead and took that cash, about $3,500, and put it into IBM, put it into Intel, and stuck it into Cisco, the tech company. Part of the reason I did that is just to build up those couple of positions to get closer to 100 shares as well, so I can do covered calls. So that takes care of the sells. I did not get rid of any positions this particular month, but I did, you know, render some profits in that Goldman Sachs. You know, bought some more Cisco, so that account is over 100 now shares, and we also bought some Intel, and that account is over 100 shares now. And we also just bought some IBM, and that is not over 100 shares just because it's a larger stock. So, but we're up to 54 shares in that one. So we did have one dividend increase for the month of June here. And let's see, that one looks like, let's see up here. Yep. Okay. So it's just looks like it's realty income. And they did increase it, but it was a very small increase, but that's fine. It does count. They increase normally many times throughout the year. So we got a 0.2% incline or increase. Why do I keep saying incline? We got a 0.2% increase in dividend income for realty income. So let's just go ahead and clear that flag here. And it's 2.8020. Or excuse me, it's what the heck am I trying to do here? 2.8020. There we go. So we'll go ahead and clear that flag out. That's the only one. We didn't have any dividend cuts this particular month. I am expecting a cut probably on Wells Fargo for the month of July, and that's unfortunate, but you know, the payout ratio is 72% on that, so they're probably going to lower it. And I think, what's the yield? The yield's 8%, so you know, that's probably acceptable. I'm not going to really worry too much about that. Hopefully they don't, you know, slice it in half or anything, which they probably will, but we'll see. I probably won't get rid of the stock. It depends on how much it sells off. I might actually buy some more, but it's just unfortunate because they've been increasing their dividend for 9 years, and that's just going to reset it. So, but that's just the way the game goes. So, and let's look what's next on here. So we got the buys and sells, we got the dividend increases there. Let's look at the stocks I bought for the month of June. So for the month of June, I went ahead and bought over 33 stocks. Okay, now these are just additions to the existing stocks I already had. And by the way, I buy out pretty much through the whole month. So these are not like just 33 buys and I was done. It's probably that I bought, you know, 5 shares here and 10 shares here, and you know, maybe 1 share one day of CL and 1 share the next day. So it could be in multiple buys throughout the whole month. But in general, this is just an aggregate of the whole month. It was 33 particular positions that I added to. And like I said, I bought IBM, a lot of IBM, bought a lot of Intel, and I bought a lot of Cisco. And because I wanted to get out of that Goldman Sachs and put that money to work immediately. So, and because I sold that Goldman Sachs, that lowered my dividend a 5-year average weighted dividend CAGR. So, you know, try to get it back above 8% next month, or this month I should say. So over $35,000 I invested in the month of June. I think that's the most I've ever invested in 1 month. And part of the reason for that is because I knew that I was getting that $70,000 of note income, that I wanted to get started and get that to work right away. I already had cash sitting in the account before I even got this note income payment, so I went ahead and just started dumping that money in, and then throughout the rest of the month I went ahead and started, you know, taking off of that $70,000 I deposited as well. So that's the stocks we bought for June, and let's go ahead and look at the stock allocation, because that's changed just a little bit. So let's go ahead and look at that here. Let's look at the allocation. So here is the allocation. It has changed a little bit. We got the S&P 500 over here. I just took from Vanguard's VTI or VIEW, and just, you know, try to keep it close to that. But obviously information technology has come up quite a bit because I'm, you know, trying to get that a little bit higher. The, you know, Intel, the IBM, and the Cisco. So, and then we got financials that have been reduced a little bit. It's not too far off. We got 10.9 over here, we got 8 over here. So it's not too far off. I do need to increase it a little bit though. I just probably wait until, you know, maybe this month, and then see if JP Morgan and Wells Fargo sell off or something like that. I don't have any problem probably adding back to Goldman Sachs either, but, and consumer staples still pretty high. It's very defensive in my opinion, so it's 21% there. Energy, you know, I added a couple just because it's so cheap, and I figured why not just add a couple, but shares of, you know, Chevron and Exxon Mobil. So utilities I kept adding to. They're cheap right now, and that's kind of getting a little bit out of control. You know, what's utilities over here? 3.6, but it is pretty defensive, so it's pretty solid, as long as they don't pull a PG&E on me. So while we're on this page, let's go ahead and just look at the CAGR down here. And because I got rid of that Goldman Sachs at the top over here, I got rid of quite a bit of that. I am still holding a little bit, but that CAGR was what, 13? And I bought Intel at, you know, 7, and then I bought IBM at 8, almost 9 there, and then Cisco is about a 13, but I didn't add all of the cash that I took out of Goldman Sachs to that Cisco. So that's the reason why my 5-year dividend CAGR reduced from about 8% down to about 7.3% or so. What was that? Yeah, 7.93, excuse me. So we, you know, it is what it is. We'll get it back up though. So I just try to, you know, keep that about 8% if I can. So, and then we'll just look at the payout ratio real quick, because, you know, this is just a quick look that I can kind of tell, you know, the stocks that are out of control on the payout ratio. And obviously we have that Chevron there at 255%. And then we got O, which doesn't really count because that's a REIT. And then we got PG is a little out of control at 167. So, and then ExxonMobil at 130. So those are a little out of control. I'm not worried about realty income, but, you know, keep an eye on Chevron. We'll keep an eye on ExxonMobil, and then we'll keep an eye on probably Procter & Gamble. So the next thing we're going to look at here is we're going to look at the dividends received for June. This is the biggest month, like I said, that I've received dividends for in the history of my life. So let's go ahead and bring that up. So here we are looking at the dividends. I basically just take a CSV file and take that out of Schwab, and then kind of just run a Python script here just to make my life a lot easier. But so we received 20 dividends for the month of June, and a total of $798.02. That's the most dividends I've ever received in my life in 1 month. There's the dates. So there's the shares total that had dripped. So we had Wells Fargo that dripped over 49 shares, and then we had, you know, Duke dripped over 23 shares. Intel dripped over 31 shares, and, you know, Southern Income dripped over 32 shares. So, and then what is that? Pfizer over 34 shares. There's the dates that they were all received. So, well, it's time to run the dividend meter again. So let's go ahead and do that. All right, that $798 was added to the dividend portfolio for the dividends received here, and that basically just, that script just writes the June dividends received there across all of these stocks at the top here, and it adds them up at the end over here. If I can scroll over, I should probably use the other mouse. Here we go. $798 there. So that's what that did, is it just updated the chart here. And then there's the month. Look at that here. Huge. Almost $800 received for the month of June. You know, dwarfs last year's. Okay, now I wasn't really a dividend investor. I just, you know, had stocks that paid dividends last year, but it still dwarfed last year. So dividends by quarter, that did end the quarter for Q2. Pretty much, you know, dwarfed 2019's quarter two. So, and then the dividends by year, like I said, in 2019, I really wasn't a dividend investor. I just had dividend stocks. And then here we are in 2020 of $1,563, basically year to date. So there's the dividend income by ticker and AbbVie and all that. I'm not going to really go through all that. If you want to pause and look at that, you can. So we looked at the dividend metrics. Last thing we're going to do here is we're going to just look at the options income that I received for the month of June. And we're also just going to look at the income projections for July. So if you want to see the hiker reach the top of Dividend Mountain, go ahead and like and subscribe and hit that bell notification. So in a previous video, I did talk about this. It wasn't a dividend update video. It was actually a covered calls video. So like I said, I might actually split this out and do this in a separate video. But for now, these are all the covered calls I've been selling against the dividend portfolio. So just yesterday, I went ahead and put on CSCO and Intel because those accounts were both, or those positions were both over 100 shares. So right now it's not paying very much, but you know, I'm not out very far in the days to expiration either. It's only 14 days out. So about $9 there and about $10 there. And hopefully those will expire worthless for whoever bought them. And you know, we're about almost 8% off the in the money, and we're about 9% off the in the money on Intel there. Now I did put on this one recently as well. The last part of June, I put on a realty income covered call. That is 6% of, you know, being in the money, so it's very close. It's about 14 days left. Got $44 out of that so far. And you know, here's that realty income that I sold up here. I did, you know, talk about in the other video, and I had a lot higher strike on that one, and I held it for 7 days. And because that stock dropped, I went ahead and just bought that back, paid 7 cents for it. Now I had sold it for 55 cents and then paid only 7 cents to buy it back. So I pocketed that $46 and $70, and that was minus the commission. So that was an 84% gain, and for only 7 days. So if you annualize that, that would have been a 33% gain. So that's closed, and then went ahead and sold another one here. So we'll just update you on those. Hopefully all these ones expire worthless up here as well. We'll just pocket all this money. So I probably will try to be a little bit more conservative on these. Like, see, probability of being in the money here is only 6%, and then 7% here, and that one's 14. So I try to stay around anywhere from 5 to about 15%. So I don't think realty income is going to be in the money, but we'll see. What's that? July 17th. So we got a 3-day weekend. So here it is. And the last thing we're going to do here is we're just going to look at the Schwab account here, and we're going to look at what's projection for June. For July. So there's July there. We've already received some, and it looks like projections only, I say only, but $257 for the month of July. That is not a big month. It's one of the smaller months. So we'll just go the next 12 months is, you know, $7,800 per year and $653. It's pretty close to what I have in here, I believe. Yeah, $652.62. So that's very close. $652, $653. So it's off by just a few cents. So, and then $78.31 and $78.36. So about $5 off. So that's pretty good. And then what do we look like? Let's see, August. August is another relatively smaller month, but then we get that big one there in September. And I'm going to be adding money to this portfolio as well. So I also got that $58,000 that I got to get invested. So that will probably add another roughly a little over $2,000 of annual income is what I guesstimate at a 3.5% yield. So I'm looking forward to getting that added. Not to mention I'll be adding some other cash from my other notes that bleed off and all that as well. So, but I kind of want to split that out because who knows what's going to happen to the market. So that's it for this video. If you have any comments, questions, or concerns, go ahead and leave me a comment below. Go ahead and hit me up on Instagram, Facebook, or Twitter. You can shoot me an email as well if you want to be a little more private. And hope everybody's having a great 4th of July, because this is coming out on the 4th of July. And, anyways, go ahead and like and subscribe. We'll see you next video. Thanks for watching.